interested as football, eating out, finding ways to relax and chill out and enjoy my own company. Accomplishment, she's been nominated as Top Advisor of the Year, and her goal is to double her client base over the next 12 months. Sam, what would Liston say about what his mum does?
Oh my God. He refers me to some of his colleagues at work. So I've had three different colleagues of him that have got first time mortgages. So I think he's quite a good advocate for my job.
Great. Over to you, Sam. Thank you.
Right. Marcus, have you got mine? Ah, brilliant. Thank you. Okay, so I've gone back to basics with this presentation just because you can't make mortgages very interesting. So yeah, you can go to the next slide. So here's pictures of my children. So Liston, like we just mentioned, he's my eldest. He's just recently left home, so I've lost all my allies. At the bottom is my middle son. That's my non-athletic child completing the half marathon in Manchester. He woke up one day and said, yes, I'm doing that. And a couple of weeks later did it. It's like, my God, I've never seen him run in my life. So very proud of him for that. In the middle, that's all three of them. Don't know when that was actually. I think that was Easter time, as we don't get them all together much anymore. And then the three on the right, obviously, that's my partner and Maximus. Maximus is our child. He is a sporty, likes every sort of sport ever, good at everything he does. Not sure where he gets that from, but that up the right there, that's him doing a park run. I said to him, pace yourself, do it slowly. He sprinted the whole way, did it in like 7 minutes. I was like, oh my God. But yeah, he's got a bit of competition. He wants to be the best at everything. So that's a quick whistle of my family, and everything what I do is for them. So next slide. So for the new people that don't know me or have been new since the last time I did a presentation, I'm just going to transfer this online as well. So I started insurance back in 2000, went to AXA Insurance, started off in a call centre, worked my way up to finance. Got made redundant in 2012 and then started Bentley Paraplanning. So that was a lady that worked in the local village, and she said she needed some admin, and then my job has just progressed from there. So I started on my own in 2017, doing paraplanning and doing admin services for other financial advisors. And then when Maximus started school, I then trained to do mortgages and protection. So there we are. So that's from September 23 to now. So 6 years, well, that's 3 years doing mortgages. So yeah, we're getting there slowly. Next one. Okay, so this is how mortgages work and the difference between different things. So imagine you want to buy a house. You've got 25,000 saved a deposit, leaves 225 left to borrow. Each month you make a repayment that usually consists of part of the money is capital and some of it is interest. Over the time, the amount you owe will get smaller and will pay the loan. So, question, which do you think will reduce your monthly payments more? Borrowing less money or getting a lower interest rate? Any idea? Someone want to shout out?
Lower interest rate.
Yeah,
Okay.
low interest.
Compound interest, lower interest rate.
So actually, both make a difference. Borrowing less money means you're paying back a smaller loan, so your monthly payments go down. A lower interest rate also reduces the monthly payments because you're paying less interest over the life of the loan. So it really just depends on what you can afford or what your deposit is, or if you can do it over 30 years, 25 years, which we will do the research and calculations for. Next slide, please. So lots of different types of mortgages. So you get fixed rate mortgages, you can have variable rates, you can have trackers, you can have offset mortgages. We're just going to talk about the two main ones, which are fixed and variable. So with a fixed, your interest rate stays the same for a set period. So the advantages of that are that your payments are the same and are predictable throughout the term. Can someone give me a disadvantage for a fixed rate?
The rate
goes down.
Yeah.
Sorry, Craig. Yeah.
So yes, so there are lots of different disadvantages for fixed rate. So you've got less flexibility. You will incur a early repayment charge. So if you want to come out, there will be a penalty on that. You'll miss out if rates fall. Potentially, you will have a higher rate than if you went on to a variable or a tracker, and you'll need to refinance. Refinance is needed later. So where that means the fixed period ends, you may need to find a new deal, and rates will be even higher. So then variable rate mortgages and tracker rate mortgages, your interest rates go up and down. It goes with the Bank of England base rate. So the advantage on that is payments may decrease, but they also could increase. Does anyone want to give me another disadvantage of a tracker or variable rate?
Well, it's tracking the rate, so it's usually higher than the base rate anyway, the normal mortgage rate.
So you got risks of higher costs. You've got the economy uncertainty. So the changes in the Bank of England base rate can affect the tracker, which directly. However, this is done quarterly, and it's not done every month or every week or anything like that. So it's done quarterly when they change the base rate, and you wouldn't actually see any effect for another month after that. So it can be beneficial for people that don't want to be stuck in a fixed rate mortgage. So types of mortgage, which one are you? A, put your hands up if you are A and you like to know what you're paying each month. That's not as many as I thought it was going to be. And then B, I'm comfortable with the uncertainty of exchange for the chance of paying less. And then some of you don't answer at all. So it just depends, at the moment, I'm finding lots of people are doing more trackers and variable rates because we don't know what's going on at the moment and still the uncertainty. However, first time buyers will like the fixed rate because they want to know what they are going to pay now and for the first 3-5 years of their mortgage. And so they can budget, plan, and know what they're paying out each month. So there's pros and cons for both. It is just individual preference, and also costing will do. And once I do initial assessment of the client, then we would look at those. Also, I've not put on there, but I did just mention offset mortgages. If you've got a big savings account or got lots of money sat away, you can just get an offset mortgage and it just chips away and makes that cheaper as well.
Yeah, 2 minutes, Sam.
Okay, thank you. Okay, next screen, please. So what can affect getting a mortgage? So I mention this mostly in my 60 seconds each week. So income, credit score, deposit, debts, and employment. So, income, we would need 3 months income or 1 year accounts. If you've got 1 year, most lenders like 3 years accounts, but there are some that will just take one if you've only got one. Credit score is very important because this will tell us if you've got adverse credit, and I look at that first before I look at anything else. If you've got a big deposit, that will help. If you've got a small deposit, there are lenders that will do it. So any situation, you can get a mortgage. It just depends if you know the right person or it will fit your circumstances. Debts will be covered off in the credit report, and I would look at that first, like I said. And employment. So you don't have to be employed with that person for 3 months. If it's the same industry, you can move around. As long as it's in the same industry, I can still use that employment history. If it's different, then I would need 3 months. So which of these usually improve your chances of getting a mortgage? I just gave this away a bit, but A, B, or C?
A.
Yeah, a bigger deposit will help your chance. So the more money you get or have, the lower the loan to value you can get. So the more chances are you get a better rate. I think, is that the last screen? Is that the last one? Questions I get asked every day. How do you get paid? Do you charge a fee? How much is your fee? When would I have to pay? Are you whole of market? And do I handle the application and communication with the lender? So again, in my 60 seconds, I usually cover all of these things. So we are whole of market. I can look at the whole, what the whole market is doing, whole industry. I'm not limited to anyone, so that's good. I deal with from initial all the way through to completion. I will deal with estate agents, conveyancers, everybody, everyone that needs to be talked to. I can be there for. Yes, I charge a fee. My fee is £595, and that just reflects the service and advice I give through the whole process. And it's just like I assess the circumstances, research your lenders, help choose the most appropriate option, prepare and submit application, and deal with any issues. We're also paid for expertise and time involved, making sure the mortgage is suitable for you rather than just selecting the lowest rate. So that's me. Any questions?
Sam, how many people are you working with at the minute, Sam? How many clients have you got?
So I have got 4 on the go at the moment. One, I've got an email through today with an offer just come through. So he was very happy this morning. That has taken me a long time. It's a very complex case. So we were quite ecstatic this morning. So I'm doing his protection and everything as well as we speak. So that'll be a nice case come through. I've got 2 first-time buyers, and I've got a lady that's got real bad adverse that we are just looking at what we're doing. So it's quite a big range. Clients.
One more question.
Sam, you probably get this asked a lot, and I'm sure Joe does as well, regarding house prices. But how do you see the mortgage market with the Bank of England? And do you try and not predict it, but do you see a trend, or is it just something you go, it is what it is, and react accordingly?
Yeah, I don't. At the moment, it's like seasonal with my job. Like everyone's got summer holidays. Everyone's not interested in looking at buying or selling. They just want to enjoy the summer holidays. Once the children go back in a couple of weeks, then you see the market pick up again. Right. That's not the case for all the time, but you do see like a fluctuation. You'll see that up in September. You'll see it in January when people are stuck at home all the time with their partners and think, oh, this house ain't big enough for me. They need to go somewhere else.
That's your kind of busy period then.
Yeah. So January and September will be busy, even after Easter, just usually after a holiday, really. And then obviously, if the government changed the Bank of England rate, we'll see people worry what they should do. But we haven't got a crystal ball. We don't know what's going to happen. No. You can just go with the flow, basically.
Right, no, that's cool. Cheers.
Excellent. Thank you very, very much, Sam. So now we know what Sam and how she works. Let's bring us some referrals.